Hello, ladies and gentlemen, welcome to another weekly podcast episode with myself, Russell, and
me, Chris. Hi.
Hi, Chris. How are you today?
Yeah, good. A bit of a birthday weekend.
Yeah. Heavy one, is it?
No, heavy. I'm too old for that. We celebrate by going early.
You can tell me what really happened after the street finished. No golfing season's over.
Let's hope on Thanksgiving.
Okay.
Thursday. It's quite a day in the market, so we grab my get out.
Yeah,
it's 3 down for the year, so I feel like the ball's in his court.
Cool. I mean, speaking about the US, I mean, main thing is that the data is back.
Yeah, this is finally here. Non-farm payrolls. We are getting it currently on Thursday. I'm presenting at university on Thursday, which will be booked in, so that's rather disappointing. I think it could be an absolutely, well, it may be a huge number, but bear in mind this is not the October number, right? We're in November, now we're in November, getting on the late November, and we're going to be finding out numbers from September's job report, not October's job report. So, I think it's going to matter. I think it's really going to matter. But I can see there is an argument that this data is so old that maybe the market doesn't care too much.
Yeah, I mean that's what I've been hearing. That it's probably going to take a good few months for people to really actually start trusting the data again. And, we're never actually going to get all of that other data back. So even for the Fed and anyone who's trying to make a decision about rate cuts and this and that, they're getting figures now, but there's no context leading up to those figures because there obviously hasn't been the figures in between. So
well, that's the thing of the Fed mandate, right? They need to control inflation, and they did force through the September inflation number because they needed that for their pricing of like pension costs effectively, or appreciations. Jobs, though, that is also in their mandate. They need to maintain a healthy jobs market, and they just don't have the numbers. So whether they can take these data points at face value, because apparently people weren't there to take the numbers, it's difficult to say. I mean, I know some of the looking back to September, the forecasts were for like 60,000 across the banks, which is obviously up from the 22, and we can probably show you a pretty horrible picture of the decline if I can grab hold of the
I'll go to the
for a moment.
charts.
Just go to our old friend.
There we go. I mean, we've been having a discussion off stream about the future of NFP and stuff as well, haven't we? So
maybe lead with that while we're waiting for this to catch up. Yeah, let's maybe do that while we're waiting for this to.
Okay, yeah, not quite sure what's going on with
those well for a stream.
The internet.
We can't open a web page.
That is happening. I mean, TradingView was working, so we definitely.
Yeah, tell me your pitch. What's your pitch about jobs
okay,
no longer
so,
mattering?
Okay, so
and I'll tell you why it's bullshit.
Okay, so this is obviously to do with the rise of AI. I mean, if anyone's sick of hearing those two letters already, so
get rid of the screen.
Yeah, so what I've been hearing is with the rise of AI, AI is essentially there to help companies increase, production without actually having to hire new people.
Right.
So the argument is that if we're not hiring, if these big companies are not actually hiring new people and also jobs are being lost, but production, is still going up, how important is jobs data?
So there's two sides of this equation. There's productivity, and then there's people with jobs or not, right? So if the productivity stays the same, the GDP numbers stay the same, even with lower employment, yada, 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 businesses do well, data looks good, bar jobs, all is well with the world, right?
Right.
Until you find 100,000 people who can't pay their mortgage.
Yeah.
Right? If you're getting lower job creation, or what was on the cusp of being job destruction on the non-farm payrolls, we were 22,000 short of that threshold. These kind of levels of employment are important because these are real people's lives, right? And it's not important just for their lives, it's for the whole economy as an aggregate. It's not necessarily saying the GDP numbers are going to be bad, but if people aren't paying their mortgages and foreclosing on them, then that's going to do some damage to the housing market. You don't have to go back too far in my trading career, back to the great financial crisis, to see how that goes when the housing market gets hurt. So if people aren't paying their mortgages, if people aren't getting employed and aren't paying their mortgages, it doesn't matter if the companies are performing well, because ultimately the banks are going to have real liquidity problems, and that can lead to a huge cascade effect that affects everything in the end. So it kind of like eats itself a little bit, the AI story.
Yeah.
Unless you're going to go for kind of universal basic income.
So we were actually talking about that because you had a really great analogy on what the government should actually do, create jobs. Is it?
Oh yeah, we meant to dig out the economic theory who put it together, but there is a school of thought that I was taught at university, which was if you have high unemployment, it actually pays you, or it's good for your country to pay half the unemployed people to dig a hole, and then pay the other half to fill it back up again.
Which would you rather be in?
But good question. Probably the filling it up. It seems like a little bit less work for the same output, probably. But I mean, the idea, I guess this kind of makes sense, right? Because that's, if you do the AI story, that takes up all the productivity. We don't need as many humans to do the work, but the same amount of work gets done. So therefore, we need to just accept the fact we're going to have higher unemployment.
Yeah.
The problem then comes, as I said, with people foreclosing on mortgages, not getting paid, etc., and so on. If you just paid them to dig holes and fill holes, dig holes and fill holes, then that problem goes away, Russell. So maybe we just need to pay people to do nothing.
Well, I mean, with the AI, obviously that does actually bring jobs, but they are specialized jobs. So really the question is our government in the UK, the American government, are they doing enough to give people, these skills, moving over to maybe working in data centers, engineering? There is going to be a wealth of jobs around the AI infrastructure, but it's whether you have that skill, or whether you had the opportunity to learn those skills.
Yeah, I mean, it creates jobs, arguably, but it's going to be a net destroyer of jobs, right? It might create you might have a robot factory from Amazon, right? Which is like, okay, well, that's created a job for the guy who needs to run the factory.
Yes.
But for the 1,000 people that were working there previously, it's a net deduction, right?
No,
So, I think net, I don't think there's a strong argument that AI will increase jobs. I think it's almost certainly going to increase unemployment rate, decrease the number of jobs we would have had in a world without AI, because we just don't need the people to do the work. The AI is going to do it for us. So, and is the government doing enough? Well, I mean, probably not really. But then, I mean, we're miles away from the coalface on this anyway. Really, the UK is not a tech enterprise place. It's all Silicon Valley and China, right?
Yeah, I mean, also as well, it is all speculation because it's early days of AI, so we don't actually know, how this is going to go, because there's two thoughts that it's going to replace everyone, and there's another train of thought that it's going to be like a bubble that bursts, it's going to hit a wall, and it's not actually going to do or give the productivity that people are saying it's going to be doing. So,
or people are going to keep all their jobs and be more productive with AI, and it could be that's like the Goldilocks situation. Yeah. But ultimately, businesses are there to make money if they can cost cut. Which is happening. There's plenty of redundancies going around in London these days. If they can cost cut to get people to not work and just get computers to do it for them, trust me, they will take that. It's not about, businesses are not designed to be social enterprises, right? No. They are designed to make money.
No, of course.
At any cost, pretty much within the law. And just not hiring new people is very much within the law. So unless there's some sort of statutes put together, some sort of laws put in place for this sort of thing, I just don't see a situation where individual businesses on that micro scale frankly care diddly squat about the net employment in the UK as a whole.
Fair enough. So it seems like it wasn't our fault. It seems like Forex Factory might actually just be down. So
good.
I'm just hoping we can switch to investing.com, or maybe if you know of another one that we can use.
No, this is good for me if I can find it. It's always a busy one, the investing.com calendar, so let me just narrow down to Thursday for you. Where are we? And we'll have a look at these non-farm payroll figures, right? So we don't actually, on these calendars, certainly on the Forex Factory earlier, there were no non-farm payrolls. Yeah, there were no forecasts on the current one. This 60,000 that I'm quoting you came from what the forecasts were before we no longer got non-farm payroll. So maybe there's an adjustment to these forecasts. Maybe we're just not going to get a forecast, which is also going to complicate things.
That is very interesting.
But the point is, what was this looking like? Well, I mean, this has been a bleed out, right? This doesn't look quite like last time. Okay, fair enough. Well, you can see the kind of story anyway. This has been COVID skews the numbers a little bit. Don't have to be a trend following an analyst to see what's going on here, right?
Yep.
Jobs are being destroyed, net.
Yep.
We're not getting the normal kind of 100, 200,000 growth that we were used to seeing pre-COVID, and then obviously for a long time after COVID, but certainly not recently. It's been very low numbers, and now extremely low numbers. So this trend has been lower. Granted, I mean, there are lows in trends, and maybe this is the low, and maybe we are going to get a bounce back. But yeah, it's not looking.
I don't see that's going to be happening personally.
No, I see. I hadn't seen it on the Forex Factory. They don't do it this way. They quote the initial number, so we haven't seen a negative print. But it was on the revision for August that we had that negative print. But we haven't had a first release negative print in this whole cycle since COVID times, effectively. And that was on the cards. And there is obviously the debate whether Trump was quite keen and the administration in the US were keen to just not get jobs data anymore because it's not going to tell the narrative that they're hoping to spin.
Yeah.
But I don't really read into that. I mean, you can go drive yourself crazy for trying to second guess Donald Trump and his motivations. Just want to see the numbers, try and work out if they're any good or not, and then we'll see how the market reacts to that. But without true forecast this time, unless you want to use that 60,000 as a jumping off point, it might be difficult to trade on the figure. And given it, like you say, do people even care? It's so old, the number. And maybe, like you say, that people just aren't going to care about jobs in the same way. Maybe the follow-throughs on non-farm payrolls may not be as they were. By far the biggest economic data release in terms of stock market volatility over the past few decades, like by 50% in terms of average volatility. Maybe it kind of rationalizes itself lower in your
well,
example.
I think we've got a bit of time before that actually sort of sees effect. I mean, we've really got to start to see this shift change of like masses of jobs losses to AI first. So the next thing maybe we should discuss is about the Fed's decision. because the rumours are growing now that there might not be a cut, and I think at last count it was almost a 50-50 decision, right?
Anytime you've got 50-50 splits this late, I say this late, we're what, 3.5 weeks away from the next Fed meeting. Fairly late to be 50-50, I'd say. That makes makes any economic data more important.
Yeah.
If we had certainty on, or near certainty on, where the interest rates would be anyway, regardless of the data, then maybe the numbers don't matter so much. So this to me does make it slightly more interesting that we are on that 50-50. I haven't checked it today, but it was certainly there on Friday.
I heard this morning, yeah.
So it hasn't shifted on anything over the weekend. Yeah, I mean, that bodes very well. I think one of the things it bodes very well for people who want to trade economic data, because you're going to get reactions as the market starts to land on one side of that equation. Yeah. Or maybe it doesn't. Maybe it's very unclear going into the Fed, in which case the Fed itself will be an incredible trading opportunity. So at some point, whether it's the economic data releases that dictate what the Fed will do, or maybe they're not clear and we don't know what the Fed will do, there will be a really, really good news trades available for you over the course of the next 3.5 weeks.
Well, I feel like from what I hear about Powell saying he doesn't want to cut because there's been no data. So I think his school of thought is, if I've got nothing to work on, it should just stay the same.
Yeah, what was the analogy of driving in the fog? Right?
Yeah, that was him. Yeah, yeah. So he was like, if you're driving in the fog, what would you do? You either slow down or stop. So that's what he's saying. At the moment, he's driving in the fog with no data coming in. So that was his statement. Whether he holds that view coming into, whether Trump puts pressure on him, as he always does.
And it isn't just Powell, though. So this is why maybe the other Fed members who we'll hear from over the course of the next couple of weeks will be interesting to listen to. Again, those Fed speakers, a 50-50 split, will be more important than normal.
Well, the hawkish, what I heard was the hawkish people are getting louder. So,
well, there we go. Yeah, it'd be interesting to see how that plays out. I think there is a chance that, well, we had a bit of weakness, unusual weakness in the stock market. Really, since April, it's just been pretty straight line up. We've seen a few kind of pretty nasty moves on the stock market of late. Maybe we can toggle over to those charts.
Especially the Bitcoin move.
Well, Bitcoin
has basically lost all the money that it's gained from the beginning of the year, right? From last October.
I'm not quite back to Trump being announced as president levels, but just to have a look at the stock market, we're having a few pretty nasty days. We did mention this on the morning call we did, that these lows tend to be being bought into pretty nicely.
Yeah,
we've often seen every time we've had some of these like spiky lows, there've been green days on my charts at least afterwards. As of yet, that's not the case here, but I'll maintain a little bit of optimism today. We can talk about levels maybe before we sign off, because the market's still open 23 minutes. But yeah, this is kind of in the middle of a range. We have earnings on Wednesday night, the most important earnings of the whole season. This is NVIDIA. Yes. This is the biggest company in the NASDAQ, the biggest company in the S&P, even in the Dow Jones these days, albeit small fry. What's going to happen here?
The sentiment is that it's going to be positive earnings, right?
The numbers will be good.
Yeah.
But does that mean anything? Because as Michael Burry was saying, obviously he's shutting down his Scion Capital now, having taken those huge shorts on Palantir and NVIDIA. He was saying it doesn't matter. The guys, the way they're accounting for the runoff of these chips, they don't last the 10 years that they're saying they're going to last. They last 2 or 3. It doesn't make sense from an accounting perspective why they would do so well. So I think the numbers will be good. I mean, all the numbers were pretty good. Even Facebook, that went down 10%, the actual headline numbers were good. They were better than the market forecast. It was just a capital expenditure that kind of freaked the market a little bit. So the numbers will be good. I'm not interested in whether they're good or not. I'm interested in how the markets react to that.
Yeah.
So if the numbers are excellent, if the numbers are excellent and the market goes down, well, we could be in a very interesting place, because it's the biggest company in US indices these days, and that is what happened at the end of the dot-com bubble. We had a streak of good earnings. Granted, this hasn't happened everywhere yet. We had a streak of good earnings, and every single time the earnings pumped, they then dumped immediately afterwards. And this really could be, and I don't think we're at bubble territory really yet. I know we're talking about it, but I'd like to see it inflate a little bit more, please. And normally this is a time of year when it does push higher. But if that happens, and bearing in mind that's on the Wednesday, then that's after the market close on Wednesday. before the market opens, we're getting the first non-farm payrolls in 2.5 months.
Yeah.
Then is option expiry Friday. It's going to be a hell of an end to the week.
It's definitely going to be
Player
interesting.
refreshing.
So I would say, with that in mind, try and go easy a little bit towards the beginning of this week, and we can stop that refreshing hopefully.
Yeah.
And maybe skew your trading towards the second half of this week, maybe even Thursday onwards. If you're going to do 10 trades this week, I would probably make 7 or 8 of them Thursday, Friday.
Yeah. So we've actually following on from what you're saying is we had someone in here doing a podcast whilst you were away. Who is heavily into crypto, and his train of thought was, if crypto comes down below 100 and holds there, that it could start to indicate the end of this cycle and the end of the bull run. So maybe what you're saying as well, if we see good earnings from Nvidia but the markets go down, maybe that could be another indication as well.
Yep. But then we're all doing this in the face of what is always positive flows in the market.
Yeah.
Right? So we see this 100,000. We saw it kind of bounce off this a few times again recently, but then finally gave it up last week. So,
like I said, it could just be a move then to just go up to 150, right?
Maybe. I mean, round numbers are a thing, but you would have thought there'd be a lot of retail trading stops below here for that reason. So if it just wants to be a little stop run, although it has spent plenty of time down here now, so maybe not, unless it can recover this rather quickly. It probably doesn't look much like a stop run. I probably need to do it today or tomorrow, really, for my mind. But if we're going to go over to, we'll check the.
With Bitcoin, a lot of Bitcoin is still actually held by the mere mortal and not big institutes. So, with the big institutes, it's probably quicker for these things to bounce up, but you're talking about actual people here that are holding large numbers, so maybe it would just take a bit longer to happen.
Yeah, and the liquidity, these two assets used to be super well correlated together. If you go back in time, they were kind of the same thing, right?
Yeah.
S&P and the NASDAQ, or certainly the S&P and Bitcoin. But more recently, this correlation has just hugely broken down. We've got big declines. You're talking 30% decline now on the Bitcoin. Granted, you'd expect more of a decline out of Bitcoin than you would out of the stock market. It's still an immature market, but I mean, stocks are within a stone's throw of all-time highs here.
Yeah.
And does Bitcoin get the Santa rally in the same way? I mean, they're not going to throw themselves necessarily into crypto in the way that they will and are throwing themselves into the stock market on dips, which we can see quite clearly here. All these little drops are just opportunities for people to kind of load the boat ahead of the run to the end of the month into the Fed and maybe a week or two beyond. I think this decoupling doesn't look like it matters too much if crypto is going to struggle. I still think stocks can actually do okay just because of the seasonality effects.
Okay. So moving our views closer to home. I know we discussed
budget time. Yeah.
Huh?
Budgets.
Yeah, I know we discussed this a little bit last week, but that is looming any time now, right?
Wednesday.
She has 2 budgets that she can put forth. One would be breaking the mandate and charging us all extra income tax, and the other one is a bit more conservative.
So break the mandate or break the bond market. Which one do you want to do?
Well, I'm guessing for the country, you'd be better off breaking the mandate.
I would have thought so. This is
people will get over it. The bonds might not.
So this move down in 10-year government. This is the 10-year yield for the gilts. This decline that we saw was after rumor came in that we were going to get that 2 percentage points put on income tax.
Yeah.
So therefore, bondholders were saying, "Hey, okay, great. If you actually pay for some of these spendings that you're doing, fair enough. We don't need to charge you quite so much for our money."
Yeah.
Then rumors were out in the FT on Thursday night, Friday morning, and then we had this big gap on gilts, biggest gap we've seen since April, because now the feeling is that might not necessarily happen. And as a result, the bond investors require you to pay them a little bit more. So it's kind of a rock and a hard place thing. Do you break your mandate, lower your chance of being re-elected, which is likely relatively low anyway in a populist or a kind of high inflation environment? You don't get too many re-elections in these periods. So maybe they just do the right thing. Who the hell knows? Just try and keep things steady. But mean, your guess is as good as mine, right? I mean, you can look at it from an economic perspective, but politics is just a whole other game, right? There's too many moving parts for my tiny mind to take on.
So on that, as a trader, on that budget speech, what moves can you capitalize on? What would be your go-to way of listening, interpreting, and then having a trade idea and then making some money out?
Yeah, you want to be well prepared, right?
Yeah.
You want to know where this. I mean, I think this yield will probably give us a good idea. If we're back up to the 4.7s, I would assume we're maybe not getting the bias is that we're definitely not getting those tax increases. If we get ourselves back to the 4.4s, probably are.
Okay.
So, but you'll be able to read this from kind of prep that's done in all the major newspapers, online on all the financial journals. You'll be able to get an idea much nearer the time. So it's Wednesday next week. I would dedicate Monday, Tuesday next week maybe to studying this stuff, especially in a week of Thanksgiving where there's not likely too much in the US. So you want to be prepared. What is the market expecting? And then you want to be trying to find out when, obviously, listen to this live. It'll be on the BBC, so you'll get no lag on the news. You'll be getting it as quick as any trader out there. You'll be able to then go, okay, is she in line with what the market was, what we were expecting, or is she not? Okay. Then for me, it's an order flow story, right? I want to see action happening. I want to see people getting caught and people responding to this, institutional money or large capital coming into the markets at certain prices. And yeah, I expect you'll get a fair, given how uncertain this is at the moment. Again, I think this will be quite a linear move. Hey, I've been wrong before.
So that's just on the bonds. I mean, would you also be looking to trade the FTSE as well?
I hate the FTSE as a trading asset. Like I'll happily trade it on earnings and month-end stories, month beginnings, but there's no order flow for me. So it's not an asset that I like to play with. I'd rather trade cable than the FTSE. So I think I'll be looking there.
Yeah. So what pairs would you look at? The yen? Cable yen?
Yeah, we're talking about this with the guys we're teaching the level 5 to at the moment. Like the yen's a great thing to trade against, because generally when all this big events are coming out, big news in the US, for example, or this budget, Japan will be asleep, right? Or at least they'll be through their working day and some. So there's not going to be any politicians who are going to be speaking to media and getting reports out. There's not going to be any curveballs thrown into the yen specifically at that sort of time. So it's quite nice to keep it like when you trade currencies, it's obviously it's a ratio of strength between two currencies, right? You're not just trading the pound in isolation. You've got to pick something.
Yeah.
So arguably the yen is a nice one from that perspective. You probably want to have an idea of what else is strong that day. There's a really good currency strength meters out there that you can use. If you're seeing the Rachel Reeves being a little bit more hawkish and saying, hey, we're going to be able to sort this out, maybe that's going to firm up the pound. And then therefore you might want to find a currency that's pretty weak to trade against, and vice versa.
That's actually great advice to me.
Yeah, it's easily done. Like the currency strength meters, I can probably throw it up on here, assuming their website's working. It's really easy to look at. I kind of recommend this for trading economic data anyway. You are into that sort of thing. So today we've got a strong pound. If you were going to trade an economic data release and it was bad news for, let's say, I don't know, we had some Canadian dollar, or we did have some Canadian data out, but it wasn't good or bad. If it was going to be weak, then this might be a smart thing to trade against. Because if this is weak, maybe you get a snap move, but then it does nothing. Possible. Seen these before in data releases and reactions to them. But if this trend is going to continue throughout the day, and again, that's not a given either, but hey, you're better placed playing it that way than you would be the opposite. Vice versa, if it was going to be good news for the Canadian dollar, maybe you trade it against the Swissy or the Aussie. Again, Australia's going to be fast asleep when Japan are, so I think the same rules apply for the Aussies and the Kiwis as well.
Okay, well, that's some good advice there coming up into the budgets that's happening soon. I'm sure one way or another we'll all feel it.
Yeah, I'm sure it'll come through one way or another. But yeah, plenty of research, plenty of preparation. All of your money really, when you're trading news events, is done pretty much before your trade, right? All of the work, 95% of it is preparation. So use this as an opportunity to do that.
Yeah, so the last thing I kind of wanted to discuss before we go and get your view on it is the absolute crazy notion of OPEC now changing their decision round and saying that they will not be decreasing production of oil, even though it's quite low, isn't it? Let's be fair.
Yeah, I mean, maybe they feel that recessions are looming and they just want to get out as much of out of the ground here at this price than they would do when it's down at 30s. I mean, I just don't see it going down there in a what feels like a structurally inflationary environment. I mean, I've still always, I mean, we keep coming back to this, these equal lows that we popped in. Just feel like we've got to take them, right? This is just liquidity waiting to be snapped up. Who knows? Maybe that's what's going to keep me away from loading the boat when it does turn. Oh, trading oil is just trading news, right? You're just trading news constantly. If you're not a news trader, just leave oil alone, in my opinion. I don't think it's the sort of thing you want to try and trade technically only. In fact, use your technical analysis to maybe support your fundamental thesis. But if you're not following the news and they are thick and fast at the moment, was it this day? Yeah, it was.
Well, Tuesday, I mean, just
Wednesday. They had OPEC news,
yeah,
IEA news, and we had them refilling the Strategic Petroleum Reserve. All
and
dumped
then
in one day.
On Friday, there was that attack on an oil terminal, or there was something.
The Ukrainian attack. Yeah, I was long oil on Friday. Partly because of that, partly because I like to be long oil at the moment.
Yeah,
a little bit of this gap close, it made me interested too. So yeah, that was some more news. It's constant flow with all the geopolitics that's going on. You never know when Iran's going to be around the corner with something else. Yeah, it's a news trading life, oil. So if you hate news trading, leave it alone. If you like it, it could be for you.
So if they do decrease, if they don't decrease production. And we're seeing more and more, need for oil, so we could expect oil to start really visiting lower areas, right?
Yeah, so if they don't decrease production, assuming same demand, then that's going to be excess supply is economics 101. Yeah, I mean, there's going to be a floor here somewhere, right? And where supply gets kind of constrained.
I just don't understand the decision behind it.
Well, it's cash flow. Maybe they just want to get as much money out of the ground. They're still profitable here. Most of OPEC are making money here, right? They're not too worried.
Not Shell and not anything sort of like taken out of the North Sea, right?
Well, it's kind of sure they still make a little bit, but it's on the margins more in the North Sea than it is in the Middle East. That's for sure. So maybe they just need to crush the North Sea oil out of the equation, shut it all down, and then if they can keep it suppressed at $30 for 2 years might do a job for that. I don't know. I mean,
I'll just start driving more, maybe.
Maybe
I'll get a driving job. Maybe I'll get a driving job. So because petrol will be cheap, won't it?
That's it.
Okay, cool. Well, have you got anything else to kind of add to what we've been discussing today? Anything we might have forgot?
No, probably not in the 8 minutes before the open. I've got a tiny bit more market prep to do, so that's probably a good place to call it. We've got a little deep dive into AI and random economic theories in there, but I think, real focus and takeaway at the moment should be news. Uncertainty around news is excellent for news trading. So economic data, understanding that the Fed are nowhere near consensus on whether, or the market doesn't think they're near consensus on whether there'll be rate cuts or not, and this will she, won't she with Reeves. I think it's going to be a hell of a week.
Yeah, well, get strapped in, eh?
All right, and I'm going to strap out. Let's go.
All right, cool. Take care. Have a great day, and thank you very much.